Alright, it is Friday, June 2nd, a little over 30 minutes after the bell. Let's take a look at the price action for the week. We're seeing a breakout toward this key resistance level here that's gone back through from 21. This is more of a weekly level, but we'll look at it on the daily here. There's this area of consolidation that I've drawn with this trend here that we've seen a breakout toward that resistance level. Though we've seen this kind of tested in the past, I would expect this to potentially pull back slightly, if not break through to the upside. But it's something to kind of pay attention to. What do you think?
Yeah, absolutely. I think that this green line here we've got for support is the very first place they're gonna look when it retraces. Um, but we're not there yet. We're still testing resistance and trying to gain that resistance and turn it into support. So um, we're not there yet, but we're real close.
Yeah, and I think it's pretty likely that we'll see that resistance level tested through even, again, like I was saying, towards maybe the 4400s on the S&P, just because you tend to see these tails for these kinds of levels. Like if we look back, we'll see price didn't just completely respect that and immediately bounce higher, right? We'll see it pull through a little bit. What it's doing is noticing that investors are going to, or traders rather, are going to be looking at these levels and entering their longs there and placing their stops below it. And so the big guys want to hunt that liquidity out of the market to fuel their longer positions here. And conversely, it happens the same way to the downside when they're shorting. So you got to think about those things when we're trading the markets. Everyone's
Yep,
going to be
and
looking at this key level as a flat round number. 4,300 flat. Let's go short there. Things are looking extended, right? But this could easily go higher, trying to squeeze out those trade stops.
mm-hmm. This right here, this big red resistance is to me the significant level that needs to be gained before we can see new highs. The next one would be this one right here, this untested, but this is the first one where we're going to see people closing shorts and flipping long. If they were short, they should be closing out here. If
Right.
they're from higher above and still in profit, this is the area where they should be doing.
Totally. And the reason that is we see this huge volume spike down here at the end of last year, down here at the lows.
Mm-hmm.
That kind of marked the end of the, higher low, lower low, higher low, or sorry, lower high, lower low, lower high,
Mm-hmm.
lower low kind of process. So we're seeing all those big longs kind of moving back in the other direction with the higher high, higher low trend continuing here. The bulls want to see it break out above this and hold. But it is going to be extended in that sort of wave pattern at that point, so they'll need to sort of refuel somewhere. Either way, this is going to be a significant portion of the profits from that low, like you were talking about. Let's pull up a rectangle here. Oh, shoot.
The magnet makes it hard to do the rectangle.
Yeah, so that'll be a 20% gain on those positions, and that's not considering the leverage that those guys are using,
Mm-hmm.
right? So that's going to be some juicy profit they're going to want to take off the table. And when that happens, they're going to want to see a way to fuel up on their longs again, right? Because they don't just want to get out of the market; they're trading it too. So
Mm-hmm.
they're going to try to exit those positions in profit, see if, or at least some of their position, probably the majority of it for that particular leg up. Potentially try to hunt some stops here for shorting, and then look to move lower again, find support, and then load up on covering those shorts and then going long again, which we could see here intraday, like you pointed out, this level just above 4,200, but even lower potentially at more significant support levels down here near 4,000. There's this liquidity pool that we've seen in the past.
Yeah.
Anyway, short term, it looks really good. I think we're going to see 4,300 easily, potentially higher than that in the short term, but it's going to have to come back eventually. I know there's talk of the breadth of the market being really bad, but until the buyers are gone, it's going to keep going higher.
Yeah,
Anyway.
I agree. I think it's going higher, even if it does have a pullback. I don't see it going below 4,000.
No, I don't think so either. I think that the only thing that would cause that would be a straight up recession. And while I know there's a lot of talk of that on the table, it's going to take a really, really big thing to cause that. Even when the banks had their turmoil, we couldn't even break decisively below this area here, right? And that represents, that's higher than, a lot of these lows from when people were actually talking about the bear market and the recession a lot. So it's going to take a lot. Let's go ahead and move on to the Qs, the NQ. So this chart's a little more interesting. We had this consolidation here, much like the S&P, but this one's a lot more flat consolidation, and then we had this big breakout to the upside here. Now it is currently sitting on this previously tested resistance level. I also think that we could see this breakout further to the upside before it retraces lower. And again, this sort of liquidity pool that we've drawn here, it could even see as high as this, which is going to be close to this 15,500 level of resistance again before we see it actually pull back. Now, I don't think that it'll make it to this 15,500 level before a significant pullback. Things are going to be very extended. The individuals who are long, even here, that would represent a very large return on their investment. They're going to want to take some profits off the table. So I think that we'll see at least a retracement back to the level we're at now, about 14,500-ish, 14,600-ish, before we actually reach this higher level at 15,500. But this is going to be a key range, an area where people are going to look to short the market here. So that I think this will cause some difficulty getting to this level eventually, and I just don't see it happening in one leg.
We'll just have to take more time to get through it, but it does look like it's gonna go right through it.
Yeah, well, I think it'll get there eventually. I just don't think it's going to happen in, this parabolic move that we just got, that's not going to happen up here.
Right.
And I guess the only thing that I could see additionally about this chart is, there's a lot of talk of AI and the tech bubble and all that stuff, among other things. I think there's a lot of support on this chart. Could come down as low as 32 or 13,200. I think it's much more likely to kind of make a stop here between 14,000 and 13,600 ish. There's that tiny little consolidation zone. It kind of coincides nicely with past places that it's stopped on either direction. So I think that's going to be a level to look at going forward. Do you have anything that I didn't talk about that you think is kind of popping out at you?
We both agree on it. It's probably going to go higher and then retrace. But it's going to test higher, retrace, and then gain, and keep going.
Yeah, I think overall, I think the chart is going to go higher. Okay, let's look at the small caps. So unlike the other index charts, this one actually is the most hammered down. Um, we've seen it kind of consolidate in this range actually for a really pretty long time now, almost a year and a half at this point. Well, almost exactly a year and a half. It's been kind of going through here. It looked really bad, actually, up until today here. I think this consolidation looked like it wanted to pop lower and sell off. But we do see this consolidation range kind of popping out if we zoom in. This is the daily chart. We did get a close above the range. It's not decisive enough for me to say we're certainly going to go to the top of the range again,
Right.
but it looks good, right? The Bulls got a win on that today.
Mm-hmm. But it could easily just reject and need to find lower support.
Yeah,
Because
absolutely.
it's already tested this guy right here. So what we could see is just a last attempt to get up to here, and then see it have to go lower to continue
Right.
up.
Yeah, I'm not calling for it to reach above this if it gets there either. I
Right.
mean, I'm just saying it looks good in the short term. Obviously, we have plenty of time to kind of discuss future price movement.
Right.
I do think that if we see this level again, kind of like you were hinting at, we're gonna go lower and touch this level, this area of this liquidity box. And historically, I mean, that is a significant level, right? Like, look how often price respected this, and then obviously breaking above, it's become some level of support, even though it hasn't quite reached there yet. But
Right.
it's gonna be this is gonna be a pretty big level, right? If this can't hold it up, it's going to go. So what is that? 16,000 all the way down to 14. Did I say 16,000? 1,600 to
1600.
1450. That's the next place. So, but even if this doesn't immediately appear to hold up, I could see it going to 1550.
Right.
And then potentially, shooting higher. We do see those tails a lot in those ranges.
Right. And do you want to look at that on the weekly real quick? I think it looks a
Sure.
little.
Yeah, I just wanted to pull in
Yeah.
that.
Yeah. You can see how that line.
Right. Perfect.
So they're testing the top of the range there, and that's been tested, but it's the bottom of the range here that hasn't been tested. This stuff right here
Yep.
hasn't been tested, and that's what this box is about.
Yeah, and I think that'll actually be pretty juicy. I think that you could have a pretty solid, like, even targeting below that is a really good long. Like, I don't like the idea of maybe longing there just because I think this represents, to me, these are like thematically almost touching this level. Like, it's not, but it's not going to take a whole lot for, if it gets back to those levels, to go there. And I think you're going to see a lot of selling pressure if it breaks below there, because the people who are trading and don't know any better think, oh my god, it broke below that level, let's get out. It's going to go lower, and they're not doing price centric TA, they're just doing trends and stuff. So they're not going to know about the significance of the level kind of just below it, and they're going to kind of get fished out. That's kind of my thesis anyway.
I agree.
Alright, let's check the Dow futures. Little boring, but still worth looking at. Actually made a pretty big gain today. We did see it kind of make this consolidation level here that looked pretty weak here. And especially so when it reached back up here and failed to kind of reach the previous highs or make a higher high. That is a pretty scary look if you're a bull. And this is just the latest attempt to kind of make it back to that range. I would say it looked really bad until this candle popped up. Now there's some narrative, right, to the bullish camp, just because this appears here. If it can make it back, it can break higher. It's not high enough yet for me to consider the Dow out of the woods yet, so to speak. You could certainly see lower, but this is a step in the right direction for the bulls.
I agree. It's testing the major resistance that exists on the chart. So after it breaks this, there's not much in the way of it getting all-time high.
Yeah, completely agree. It's kind of a boring one, but still worth
It
going over.
is.
We'll check out gold. This is a little bit
Oh,
more of an interesting chart, right? So we've seen it fail to make a new high here. There's a lot of tails, like a lot of shorting pressure that's occurred here 3 different times on the chart. Now, the fact that that has happened 3 times makes, well, 2 times in this scenario, makes this one look like the most obvious short ever. And it's played out that way. But I think that what's very likely to occur is everyone sees that, and what's going to happen is these people are going to probably move lower. The price is going to probably move a bit lower here, find a little support, and then move higher toward this level, and then finally break out after squeezing these shorts here. I don't
hmm
think that we're going to see. It's certainly possible that we could, but I'm not so sure that we're going to see a low below this support level on gold.
Yeah, I like that. Can I look at this line right here?
Yeah,
This line right here, it is there because of this over here. So this was all. This was the last time it was at all time high, and that was the support it tried to use to keep
right.
going, and it failed. So that's why right in here, that's what produced all this need to go lower to find support, um, because it failed there and it wasn't able to hold in this section. So that's why when all of this occurs, it gains it finally, and then it won't hold, but then it comes up and does gain again. That's why right here, before it's been retested again, that's why it's now support, because of all this used to be support, became resistance, and now it's support again because of all that price action. Um,
Yeah,
and that's why we're looking at that as the next untested level of support that we find on the chart.
I agree with you. I actually do think that one will hold up, but it could move lower. I don't really see gold moving below this 1800 level. It could
I
happen. Um,
I agree.
I just think the problems, we're technical traders, but there's too many like fundamental issues with the economy going on to cause it to go low. Like until inflation goes down, people are gonna look to gold for hedging. So I think it's gonna stay at the higher end of the range, gold prices that is, for quite a while,
hmm
and this just supports that thesis here. So all right, let's move
I
on to
agree.
oil. CL1 oil.
Pretty spooky.
Yeah, not a great looking chart. It actually looked like it wanted to break back out. Actually looks a little better on the daily if I do this. It's kind of been flirting with this range as support resistance for the better part of a year at this point, and it had broken out below at one point and then made it back up higher. So that was a win if you were a bull, right? But then it just kind of retraced back down to this level and actually ended up testing this support level. Um, and you really, if you were a bull, needed it to break out back above about right there, and then it failed. So this doesn't look good. It's coming back now, but it looks like it wants to potentially reject if it gets past here again, barring some type of catalyst. But it's gonna probably retest this around 43.5 and move lower. At which point we're looking towards this 53
hmm
ish support level next.
And let's see where that comes from. Just way back there.
Yeah, that's long term.
But yeah, that I mean that looks exactly like the next spot for untested support to me.
Yeah, I mean, there isn't really too much to say other than oil does not look good for higher right now. We'll
Right
we'll
this
need it to
minute,
close
yeah.
above Probably closer to 74 before it can actually look good again. I mean, it has been flirting with that level for a long time, so who knows what can happen. But short term, it needs to make a new high in this, well, a higher high on this bearish trend, or it's not going to look good.
Mm-hmm.
All right, we'll go over the dollar index. So this one had been curling up, and literally just yesterday, I believe, tested this level. It was a couple days ago, but it ended up testing this previous resistance level on the. Sorry, I was looking at the wrong one. This resistance level here at around 104.6, and it kind of tailed off there and is rejecting. Could obviously move back and test some more, but initially it looks like it's pulling back. Green day today on the dollar index, but until we see a more definitive price rejection here or a move lower, anything could happen to it.
I agree. I feel like it's more likely to go up than down, but when I say down, I mean under 100. So I see
Yeah,
more like 110 before 100.
I don't
That's
really
that's
think it's going to go to 100. I mean, I could see this level 102-ish being a thing. Like this, we had this labeled as resistance, um, but I think looking at it, it looks like it's actually been tested a bit.
yeah. I think we just need to change the.
So that's been tested, but you could easily see this come back down here and bounce higher. Um, I do think this doesn't look good for short-term bull movement. I think that you're gonna see it come down to something like that and then move higher. I agree with you. I don't think we're gonna see this under 100. But
Carry.
if it moves up, I mean, a lot of these things have been tested, so you could see it go to 110 really easily.
Yep.
All right, then we'll go over the banking sector, KRE banking ETF. Normally we wouldn't cover something like this, but given the talk of rate hikes affecting the banks and having a few bank failures earlier this year, we thought it was important to at least include it. Recent price action actually looks like it's testing a key level right now. We've seen this. Let me ray that. This level has kind of played out a few times, right? It was support here, and then it broke below, and now it's currently resistance, right? And we see this topping tail there, and we're closing just on or slightly above it right now, but it's not a decisive break. We're going to need to see that come higher before we can consider this ready to kind of move to the next resistance level and go higher.
Right.
But
I'm looking for those two candles. Personally, I want to see.
yeah, why don't you talk about that concept for a second?
So my favorite idea is that when you see a trend and it's about to change direction, kind of like what we're looking at right here, is you see this resistance right here. This right. Ooh, maybe we'll turn that mag.
Yeah.
Um, that's the last place on the daily that it tried to find support and go higher. And so that's the first spot of real resistance. And you can see that take place. You can see that test right there in the wick. And it didn't go higher. So it had to come back down here to the what was previously untested support and go higher. So what we're looking for now is two closes above that level that was last support. So we want to see two candles on the daily confirm above this line here. and that shows that instead of just immediately rejecting like this candle did, now again, it did find support not too low, so it's not a big rejection, but it did reject. If you shorted here, you're in profit. You can make a little money there. And so what we're looking for is two closes above this green line, and then that turns it everything in here into confirmed support that will produce higher highs. Now, the trick about it is that this happens on all time frames. So you have to look not just at the daily, but at the weekly. Because on the weekly, you can get the same thing that happened already. What could occur is we go up here, and you've got we just confirmed this, but on the weekly, it won't necessarily stay around in the level that you're looking to for it to close. So, and then this is a bad example of it right here. But we need to see lots of closes above this, and then that turns a weekly into two candles that stay above the level, and that confirms the weekly trend. So a weekly trend is stronger than a daily trend. So it's going to do different things to the price. Now, the other thing is like I said, it happens on all time frames. So you have to look at all the time frames, understand which trend is currently being respected, and you'll know where the confirmations take place when you see those two candles that close above the level that was last support. So on the monthly, what we're really looking for is two candles up here to see. And when we do see two monthly candles, not daily candles up here, two monthly candles in this territory, what we're looking for is, some kind of retracement and then all-time high, because this is the last place that it saw support. And so that's where the resistance is. That's where the bulls are going to take over on the monthly chart. At least that's how I see it.
Yeah, it's interesting because, like you were saying, it's important to confirm on all the time frames because, like right here on the daily, that idea that you were talking about, two closes, right, that plays out right there where you highlighted.
Mm-hmm.
But on the weekly, it looks good there too at that area, right? We have this close below and this close below. But we don't have that second weekly close up here yet.
Right.
And you could argue that this isn't high enough to necessarily, or actually no, I'm looking at the wrong one. This is closed above. So we're going to look for a second one. But on the monthly, there's a...
You can't really see
can't
that
even really
as someplace
see...
that it supported itself, right? That's just...
Right. Well, and the thing is,
call that consolidation.
Exactly. My point is you can't even see that that's a thing here, so you're not even considering that on the monthly. We come down here, and we do have these, this is clearly a decisive close below this level. Right? But we don't have, we do have two closures, above here, although you're not looking at it in that context. But this could easily on the monthly revert back up here. So it's important to check all those time frames.
Do you mind if I inverse the chart and do it on the...
Sure.
After all-time high? So I just inverse the chart. So this is that all-time high? Or, yeah, it is. So this is all-time high here at the bottom, and you can see the exact same thing occur right here in the same direction, the exact same pattern. So the last place it tried to find support, it tested it, but it failed. It came down and closed below. So now what you're looking for is two closes above that. You get two closes above that right here. That's the confirmation that it's going higher, which is actually lower. We're talking about a short, since we inverted the chart. And then you can see how that confirmation produced this support here, which is actually resistance, but again, ignore that. And that is what this is exactly what I'm looking for when I see two closes, because this is where my trade is going to be after these two closes and all this. That's what I'm looking for, because then you see all that. And again, they're shorts, so minus 50% is that's a trade right there.
It's a big one. Yeah.
It's a banger.
And the cool thing about trading like with that confirmation style is that it's not, a lot of these things look really obvious when you're looking back at them, but if you have that in mind, then you'll know about this at concept way before it even touches back to this level. Like your order's already there, right?
Mm-hmm.
Because you saw
It's
this
sitting there
touch
waiting.
right there, and then you have your two closes below that level right here. So now you're thinking, okay, I'm looking for a retracement back to this level, and I'm going to go short here, and
Exactly.
then you're confirmed right there.
And the best part is it's a monthly chart, so you're confirmed on the monthly trend. That's why it's a 50% move. That's why it's such a big deal, and that's why it had to come so far down to find monthly support as opposed to daily support. Like people ask, well, why didn't it stop here and keep going up? Well, that's daily support, not monthly support. And this right here. Oh crap!
And we're a little extended
I
out
blew it
there.
up. Can you help me with that? What we're talking about is a monthly trend, and just zoom in. Yeah. And that's why it has to come down to these monthly levels around 42. That's why it was such a big move, because it was a monthly trend, a monthly confirmation.
And so, like, if you're really paying close attention to this chart, if you really had some more really negative, price action move into this, there's support all the way down here at 24.
Mm-hmm.
That
Mm-hmm.
that
It
could
could
that's
keep
a
going.
totally, that people might say, oh, that's ridiculous. The banking, crisis is over. This is super in play. This is totally possible, completely realistic in the rest of this year.
Absolutely. And again, it comes down to like, a lot of people would see this more as a fundamental chart, which is fine with me. But you can see all this right here. They might need to gobble up that liquidity. They need these stops hit so that there's cheap shares, if you will. Let's just keep it simple. Down here that can get scooped up and used as fuel for a higher. So
Right.
that all works out for me. Like it could go lower, and you ask, well, didn't you say it's starting a new daily trend? Yes, it's starting a new daily trend, and you can still make money going long in this area, but you just have to have a tight stop loss. Don't have a stop loss that's really loose down at like $30 or something like that, because you'll get cooked. So
Right.
what we could see on the daily chart is something like this, but it doesn't necessarily have to hold out there. Oops, that's a really bad. Um, we could see it come up, but there's on the daily, it's hard to know exactly what's going to happen until you see the confirmations on the higher time frames, and you can walk the time frames up. So you'll want it, but before you take a really big position and be like, yeah, this is a great ticker to be long on, you really want to wait for the weekly. But you can do a shorter term trade with a tighter stop on a daily, and then add on to it and turn it into a weekly trade and then a monthly trade, and have a larger trade that's firmer, because it's in profit the whole time if you do it right, because you should be buying when everyone else is afraid.
Right. That's interesting. I want to, if I can zoom out, I have something I think, yeah, oops. Don't want to be drawn on the chart where I'm not trying to draw. This area, right, kind of in this range here,
Mm-hmm.
coincides with that big kind of drawdown from before, where you saw that consolidation occurring in the past. So
Right.
even if we look at the initial downtrend here, like we'll zoom in real close because I want to see the volume bars with this. You see this initial like rejection off of that area, right? And of
Mm-hmm.
course, people are, well, they see that and they're scared. everyone's getting out. But look at the volume. It's actually
Hmm.
not that high relative to the
Right.
next one.
Right.
That's when, okay, this closed below. Now it really looks scary because this isn't like, you think before this closes, oh, it could go back up,
Sure.
this
Sure.
could totally happen. But now when it closes, it's real, it's happening. And that's when you see these big volume candles coincide with these big moves.
Hmm.
And also, that's where they're pulling all that liquidity from these other moves in this consolidation range. I mean,
Absolutely.
you look at
And if
a lot of this volume, even the biggest candle here came from touching the past consolidation range. You saw
yep,
the biggest volume wasn't even on the big move. It had already
yep,
done it.
it was the
It's down
bottom.
here.
That's because the big boys are at the bottom.
Right, exactly. Anyway, so it's
That's
really
exactly
important to
right.
kind of analyze those larger time frame consolidation levels and look back that far. I know a lot of traders don't like to look at monthly charts. I really think that you should. It really helps you get a big picture look and kind of see where the big liquidity pools are hanging out.
Hmm.
Anyway, that's kind of our thesis on trading the markets in general, I suppose, is trying to find where the big boys are and trying to get in with them.
Absolutely. Like the your most profitable trades. Any trader in the whole world will tell you his most profitable trades were always the trade that he sat on for a year or more. The one he didn't touch, he had the right spot. He had the right price. His position was perfect. He came down. The price tapped his position, filled him, and he didn't do anything. He didn't touch it. He didn't sell it because Kramer said get out now. He just sat on it, and that I guarantee you ask any profitable trader what their most profitable trade is, and they will tell you it was a very long term trade. So that's why I'm looking at monthly charts. I want these long term trades that I don't have to get in and get out twice a week or something like that because I'm looking at a longer time frame. I want to be a lazy trader that doesn't have to look at anything and just makes money.
Yeah, and another thing is about your risk management. You're going to make the biggest risk to reward on those really long term trades,
Exactly.
right? So, I'm not predicting anything by saying this, but this support level is technically still in play, right? If
Hmm.
it comes down there and you have I'm not even gonna like analyze like a real trade, but if you were down there and you had your stop here, you're risking a little under $3. But what's your upside from there if you let that ride long term, right? Like look how high
Right. Right.
it's total. Once this stabilizes, you bet you're gonna be back up here probably somewhere in this range. The You're probably looking at 100, two timing your money there, and you only risked like you know I don't know
Sure.
4%.
Yeah. Let's look at it. They have a tool for that.
Yeah, I know. I didn't want to take a position and be like, this is where I would place my trade because I would
Oh,
need to look
sure.
at it more. But yeah, we can look at that.
It's just an example to show the risk to reward. So if say your stop is right here, which everybody needs a stop. If you don't
Below
have a
the
stop,
low of
you're not doing it right.
the previous swing low, yeah. So your
Yeah.
risk reward
Yeah.
ratio there 7.88. That's incredible. And the actual realized return would be 52%.
And that's just this first major support. It could easily what we could what we could easily see is something to the effect of this, where it gives you a chance to refill off of that 50% you've already made, and then go higher. So it you really want longer term trades, especially since this right here, these areas are exactly what the big boys are looking for. They don't want a situation where they need to have a stop loss that's like really large. That doesn't do them
Yeah,
any
that's
good.
bad.
That doesn't do anybody any good. Now that does make a little bit more sense on a higher time frame, but again, that's that's when they're focusing. Excuse me, I don't know what I just did.
That's okay. I don't know why the chart. I know we don't have it to auto, but every time I put it to auto, it makes the chart weird. So
Hmm. I kind of
anyway, go ahead.
goofed it up there. Um, I'm just trying to just trying to get people to look at the longer term charts, because the longer term charts are what's in charge. That's what's deciding where the price is going to go. The lower term charts tell you the exact penny that you can get in at and get out at, but the higher term charts decide the direction of the market, in my opinion.
No, I mean, you can look at any chart and it's really easy to find. If I go to the 30-minute chart,
Mm-hmm.
which is a ridiculous time frame to look at for something like this, but
I would auto that. Yeah, you're going to be at that all day trying to make that look good.
you know, um, this looks like it looks like it's doing a, it made its lower low here. We've made its I would still consider that based on this a lower high. But then we get this, right? Higher low. Then I would argue this is, higher high, higher low, higher high, higher low. And it's moving back up here. It looks good for a breakout. But we go back to the monthly. We're decisively below this level. I mean, this could easily pop lower.
Absolutely. And we're just waiting for those higher time frames to confirm which direction. And again, so real quickly back to the 30, just to paint that picture of it happens on all time frames. What are we looking at over here, right? I probably shouldn't have hit this auto. Oh no, we're looking at this right here.
Right.
So you can
that was the initial
right
rundown.
here. Yeah, right here is the last place it tried to find support before the low, and it changed direction. When did it start changing direction? When you see not two closes above, this candle doesn't, this candle doesn't. It's all the way up until right here. And you'll see that that confirmed support, and it held right there, because this is the first place, and I would honestly say that's untested, because of all of this price action here means that on the higher time frame, it's confirming that movement. So while there was a tiny little test there on the 30-minute, on the higher time frame, right here, there's no test. So as it gains and confirms those higher time frames, this turns into support, and is why on the 4 hour here, and it do the same thing on the daily, of course, it holds and produces a higher high, and that's how it starts to confirm up from the tick chart to the 1 minute to the 3 minute. You can watch it confirm all these trends the same exact way. It's just when you're looking at the 1 minute, you have no idea whether that 1 minute trend is going to be the same trend that turns into the monthly trend. But that's why the big boys have positions on both sides of the market, because they don't know until the monthly hits. Anyway, that's my little spiel.
Yeah, I mean, well, we went into quite a bit extra there, but talking about how we trade and to looking at the market a certain way. But I mean, that's pretty much it for this week's price action and movements. So I think that we'll call it here and see you guys next Friday. Thanks again for watching.
Thanks for joining.